Chapter 2, Basic Accounting Terms. In this chapter, we are going to study some basic accounting terms which are used in the business on daily basis. Some examples of basic accounting terms are business transactions, capital, account, liabilities, assets, drawings, expenditures, incomes, profit, gain, expense, insolvent, solvent, etc. We are going to study one by one. The first term is business transaction. Business transaction means exchange of goods and services for money consideration. Business transaction may be cash transaction and credit transaction. It may be external or internal transaction, but the involvement of two parties are necessary. The next term is account. Account is a record of all business transactions relating to individual, firm or item, but according to date. That means chronological wise. Separate account is prepared for each individual firm, assets, liabilities in the form of ledgers. Example, capital account, cash account, RAM account, etc. Account has two sides, debit and credit. The next term is capital. Capital means the amount which is invested by the owners in the business is known as capital. We can calculate the value of capital by using the formula capital is equals to assets minus outside liabilities. The next term is drawing. Drawing refers to that amount which is withdrawn by the owner from the business in the form of cash or value of goods for personal use is known as drawing. Drawing reduces the value of capital. The next heading is liability. Liability means amount of all claims besides honor are called liabilities. Liabilities examples are creditors, bill payable, bank overdraft. These terms include the meaning that means the firm is liable for which items. Liabilities can be calculated from assets minus capital by using the formula. Liabilities are of two types, internal liabilities and external liability. Further, external liabilities are divided into two types, current liabilities and non-current liabilities. Current liabilities means those liabilities which are repayable within a year or operating cycle, whichever is more. The example of current liabilities are bills payable, creditors, bank overdraft. The next heading is non-current liabilities. It means the liability which are payable after a long period of time, that is after 12 months. The example of non-current liabilities are debentures, long-term loan, mortgage loan, etc. Now, the next heading is assets. Assets are the most valuable resources. The example of assets are land, building, plant, machinery, furniture. Assets are the future economic benefits, the right of which are owned or controlled by an organization or individual. Assets may be tangible or intangible. That means it can be physically present or it may not be physically present. The assets which have physical existence are known as tangible assets, and which do not have any physical existence are known as intangible assets. That means which cannot be